Hey, Dan Passarelli here, and happy weekend. We did it. Another one under our belts. But we got another one next week, and that's exciting because there is almost nothing happening next week. Oh, yeah, except for that one big thing, the one thing we need to concern ourselves about, the Fed announcement. And honestly, there's not really much else going on all next week. So it's kind of a weird market. We've seen these periods where when we have silence, a lack of news, we get this, we get this optimism in the market, and that's what we saw this week. Following last week, one of the worst weeks we've had in a couple of years, we had an extremely strong week this week. Now, from a technical standpoint, it looks like we're just about getting to that triple top level. Now, look, it's only a triple top if it reverses there. Otherwise, it's a double top, and the market will have broken through the resistance created there and can continue on for a bit. But there is really one concern that I have going into next week's Fed announcement, and that is that the Fed tool, the federal funds rate contract over at the CME group, it's kind of tipped the scale a little bit. We were sitting there with over a 2/3 chance of a 25 basis point cut, and now traders are factoring in almost 50-50 chance of 25 basis points versus 50 basis points. There's a great deal more optimism that there will be a 50-point cut. So the concern there is that if we only get a 25-point cut, I think that this market can really sell off pretty hard. Now, the other side of that, if we get the 50 basis point cut, especially now that it's 50% factored in, and we've had this big run up this week, and the P/E ratio of the S&P 500 is still at historically high levels, what happens then? Does the market rally because we got a 50 basis point cut? It might not. It might just stay there, or it might still even sell off. So that over-optimism that we're seeing, that is the one thing that concerns me, at least as an investor. As an option trader, I don't really care because I can play these mini trends like I talked about in the trainings that many of you attended last week, or this past week, I should say. So I don't care as an option trader, but as an investor wanting the market to rally, this is something that concerns me. And either way, as a trader or investor, using options to hedge or speculate on a potential volatility move can be a pretty strong thing. Now, that being said, the implied volatility is still priced a little high, notwithstanding the fact that Thinkorswim slightly overvaluates their implied volatility on the volatility chart. So we kind of have to drill down to the option chain. So with historical volatility solidly at about 15%, if we go over to the Spiders option chain here, and let's just drill down to the near the money's about 7 days. Yeah, I mean, we can actually buy it at this point. Of course, these numbers are a little bit depressed because it takes the 3-day weekend out. That number is a little bit below the historical volatility, but, arguably it should be, maybe almost a point higher. So basically, we have the opportunity to purchase fair volatility. And if volatility comes off just a little bit more, which it's going to be tough to see that going into Wednesday's number, but if it comes off a little bit more, I might start going back into that long straddle camp. All right, that's great stuff to think about over the weekend. This is Dan Passarelli. Hope that helps. Trade smart and get some rest this weekend.